Welcome to Markets Now. I'm Michelle Rook with Vince Boddicker of Farmers Trading Company, and seeing kind of some mixed trade in both corn and livestock futures early on Tuesday morning. Vince, I want to start off with the grains, especially corn made new lows for the move again this morning before now trying to bounce just a little bit. But really, weather and the better crop ratings have just kind of continued to keep a lid on that market, right?
Yes, there's really not a lot of reason for someone to come in and buy this. If you're a livestock producer, you have some ideas to do it just because the prices are where it's at, but no incentive for that investor to go out and buy it. Supplies are adequate. Yes, we've had great demand over the last several months, but nobody really cares at this point in time. It's a psychological game, and we have to find something to turn it. And one would think that's probably weather. And right now, that's not affecting us. And one has to think when you looked at Monday's forecast, it was definitely a bit wetter for that Western corn belt than it had been previously. And I'm sure that did not help us any.
Yeah. What about this extended forecast that we've been hearing about? There's been a lot of folks saying, hey, the last part of June is going to be hot and dry, and that's the start of a weather pattern change that's going to lead to drought and some extreme heat.
I think all we can do, Michelle, is sit there and watch it and see if it happens. Because we know that can happen. If we go back to 1983, planting in the U.S. was way behind. South Dakota, we didn't get a lot of the beans planted till around the 20th or 25th of June. But by the time you got to middle of July, you were in a nationwide drought. So that can happen. We did have that same discussion last year, and it didn't materialize. So I think you keep it in the back of your mind, but don't make your marketing plan on it.
Yeah. I mentioned July corn making new lows for the move again this morning. Do you think we're getting to a point where we're not going to have to go too much lower there in that market?
One would hope so, especially in the new crop. The funds, as we discussed, they're making money and they're going to continue to sell until something changes their mind. But I think the rate has slowed a little bit in here. But every 10 cents we're going to have support. I think the real key is today and tomorrow, not the close into new contract lows.
Right. And we're below crop insurance price, aren't we?
We are on that, looking at the new crop, we are. And as we noted, if you look at some historical numbers, I think 15 or 18 of the last years, one of those was the only time where you didn't at least get to 105% of that crop insurance price, which I think is somewhere around 490 or 494. I'd have to go back and look at the number. So I think there's hope there, not that can't take until next fall to happen. But I think you got to be patient on the new crop. Old crop, you just have to know where you're at. If you need cash flow short term and this thing starts closing into new lows today, you probably need to sell some cash and wait for a point in here. If it dropped another 10 or 20 cents, you probably want to do some reownership somehow, just in case something happened later in the year.
You bet. And the wheat market has not done any favors here for the corn market, or at least it didn't yesterday. Wheat, are we seeing harvest pressure? What is the pressure back in the wheat market? Because we did actually have a higher weekly close last week. Why haven't we seen more follow through?
Just like corn was higher also, it didn't make any difference. But I think a lot of that wheat is, you had a decent rally. You had a 60-cent rally in that Kansas City September off of the bottom, which is nice. And it may be time for a correction. Again, we talked earlier with the change in the forecast, which, it's wetter in the southern plains when they're harvesting. They really don't want that for the most part, but they have it. And the market doesn't care at this point. And we have to remember those funds are still near record short in there. And until something prompts them to get out of there, they're probably going to defend those positions.
Yeah, another thing the wheat market hasn't seemed to care about is escalation of the fighting over in the Black Sea between Russia and Ukraine, right?
Right. I think we're going on year 3 or 4. I can't remember what it is, but it's old news. And unless there's something devastating that happens, I don't think the market is going to care a lot about where it's at.
Yeah.
We look at dry weather in Eastern Europe, in Russia, in Ukraine, China, Australia. They don't care about any of that right now. It's more money flow and psychology, and we have to find something to change it, just like we do in the corn.
Yeah, and I think they raised the Russian wheat crop estimate again. That did not help either, did it?
No, I think that was out Friday, if I remember right. But yes, I'm a little surprised, and you keep hearing dryness here and dryness there, but they did raise it. I think we did that a few weeks ago, and then a couple days later they backed it off again. So, like everything else when you're doing in there, we have to wait and see just how it all shakes out.
Gotcha. So soybeans are trying to hold together this morning. Is that some optimism about maybe these U.S.-China talks producing at least a stalemate or at least a stalling some of these tariffs?
You got to believe that's part of it, Michelle. The other side is it's held together fairly well compared to the other one. Just looking at the balance sheet and stocks to use ratio that are anticipated to be out there with less acres. When we look at the China talks, whether they are productive or not, I'm really not sure it's going to make a lot of difference if they aren't productive, because I think it's all built in already, and China hasn't been doing much, as we can see by weekly and annual exports. The other thing I think you have to look at in the bean market that's unique is from last September, October through April, I think we have had record exports of bean oil and bean meal, and the same thing on going back to corn on ethanol and DDGs. I got to think those export things sure aren't hurting the bean market, and you got to like it because most of that did not go to China.
Yeah, I'm with you. I think the product exports have been holding that soybean market together. It's a great point that you make. The other thing we have coming up here, let's talk about WASDE report on Thursday. What are we expecting? Many changes? What are you watching?
Again, I don't think you're going to see many changes in your profit. The one on the 30th, the acres report and the stocks report will probably be much more influential on where we're at. Again, like the China news, I'm really not sure they can give you a lot more bad news in most of these markets than they've given us already that are going to make it go down. It might, if it's good, it might make it go up, but the real key is it should be a fairly quiet report.
Yeah, we're waiting for the fireworks at the end of the month then, right? With the acreage and quarterly stocks.
Yes, that would be my guess.
Yeah. Let's talk a little bit about the cattle market, because we get these little breaks and then the market just gets bought, pushes us back into all-time highs. And with the futures at such a big discount, is that going to continue to be the pattern, you think?
Right now, one would look at it and say, why wouldn't it continue to be there? Nothing fundamentally has changed. I don't think it will short term. Like anything else you're going to do in this market, someday it's going to stop. And when it stops, it's going to get a big correction. Is it going to be something fundamentally that happened? No, I don't think so. I think it'll be a psychological thing, a money flow change. It will be the investor exchanging their longs to some newcomer in here, or some hedger that's finally tired of paying margin calls and getting out and turning around. But unless you get something else in the world that we're not expecting on bad news, that could do it fundamentally. But I think it's more of a psychological turn when it happens. And at the present time, do you need to be hedging? Well, it's great prices. We could say that for the last $40 in the fat cattle or 60 in the feeders, and it didn't do you any good if you hedged them in here. But have plan B in case this thing turns if you don't have any protection on.
Yeah, but the cash market has been pushing this. We're up almost $30 over the last 8 weeks. And how long does that continue? Because it's been pushed not only by tight supplies, but demand has been strong, hasn't it?
Yes. And I think demand is still going to be the key. Box beef has been, it took it a while, but the last 3-4 weeks has been exceptional on its run in here. This would be the normal week, or the average week, let's say seasonal, for box beef to top. If we top that, it's going to get a little tougher for this to keep going, I would guess. But again, if the packer continues to have demand out there and he doesn't have the cattle, he's going to have to pay up to get him with the current situation that we're in, as far as how tightly held those feed yards and the individual producers are going to be.
Yeah. Well, we've run the hogs up into some new contract highs in the deferred, some new highs for the move, in maybe some of the nearby contracts. It's not just been about following the cattle market. Talk about the fundamentals that are driving that in the hog market.
Yes, we're sitting here again, pork cutouts really lagged until about 3 or 4 weeks ago, just like the box beef did. It seasonally needed to come up, and it has. Now we get to the point of tighter numbers. Last week or yesterday, they did come back and reduce last week's kill by 8,000 head, which makes it even tighter. And we are tighter on those supplies than USDA was projecting. And demand has been good. Part of that is disease, I'm guessing, on where it's at. Part of it is the hog business. The last year, 18 months, has really not expanded like they did for years. Finally saying we're tired of losing money. Why do we keep punishing ourselves by putting more production out there?
Yeah. So do you see much more upside in especially those deferred contracts with what we just said, especially about disease, or not?
Those back months, I think, Ken, and they've been what's really leading us till lately. But again, if numbers stay down and we can keep demand up, I think you're okay. How far it goes, that's a good question, Michelle. I think it all comes down again to, does money keep coming into this? Where are we at from a demand standpoint? Beef and pork are both down export wise from a year ago and month on month. And part of that is the tariffs on where we're at and what we're doing in the US dollar in comparison to other currencies. But we still have to see domestically, if we hold up demand, I think we'll be okay.
Yeah. And like you said, the funds have been buying meat and they've been selling grains, haven't they?
Yes. Yep. Definitely.
All right. Thanks so much. Vince Boddicker with Farmers Trading Company. That is Markets Now.